Good afternoon. Today we're going to do value-added tax, which is known as VAT. But before we start, let's just read the question we are going to do. It says here, the information was extracted from the records of Tokyo stores for the VAT period ending 31 July 2021. VAT is applicable at a standard rate of 15%. That's important, meaning that VAT is 15%. Then it says, calculate the amount payable. So meaning, it's either you're going to pay SARS or SARS needs to pay you. But they're saying calculate the amount payable to SARS in respect of VAT by completing the table information in the answer book. Okay, so before we start, let's just do a quick summary of what we know about VAT. We know that VAT needs to be paid to SARS. So when VAT needs to be paid to SARS, VAT is actually SARS's money. Okay? Now when do you pay VAT? You pay VAT when you are a VAT vendor. And when you are a VAT vendor, you need to charge the client VAT, and then you need to pay over the amount you're charging plus the VAT that needs to be paid to SARS. So we're going to say this is your amount. You are the vendor, right? And then you need to pay the amount you're charging plus the VAT needs to be paid over to, or you need to charge, this is the amount you charge, and then this is the 15% that you pay SARS. So we're going to put it in terms that they use in VAT. So this would be your excluding amount, right? This is the amount you charge plus your VAT amount will give you your inclusive amount. Meaning, this is the amount you charge, this is the VAT you need to charge, and this is the amount you will charge the client because you need to pay. Of this amount, you need to pay to SARS. So meaning, this amount will equal to the 100% you're going to charge plus the 15% you're going to charge. So the inclusive amount always represents 115%. Your excluding amount always represents 100%. Plus your VAT amount always represents the 15%. Like we read in our question, VAT is at 15%. If VAT was 14%, this amount would have been 14%, then you would have said 100, plus 14% would have given you 114%. What else do we know about VAT? Let's do a T account. VAT is paid to SARS, right? They call it a VAT control account. But this is actually paid to SARS. And when you pay someone or you owe someone money, it is a liability. And what do we know in accounting? A liability increases on the credit side and it decreases on the debit side. What else do we know about VAT? That when you are a VAT vendor, everything you sell, you need to charge VAT on it, and the 15% you need to pay to SARS. So basically, what we can say means that everything you sell, meaning it's sales, you then need to pay over to SARS, and everything you buy, you can now claim from SARS, right? So, what is it that you need to pay to SARS? What is payable to SARS? This is payable, meaning if your balance is on this side, it shows that you need to pay SARS. This is receivable, so if your balance is on this side, it means that SARS owes you. So when it's payable, you owe SARS money. And if it's receivable, SARS owes you money. Okay. And another way that we can say on the debit, on the credit side is always output. Output VAT, on the credit side it's input VAT. What does this mean? Output VAT basically means this money you need to pay out of your account. You need to pay SARS. Input means this is the money that can come into your account, which you basically claim from SARS, right? So this is buy or payment. If you make a payment for something, you are allowed to claim, or sell, or if you receive money, then you need to pay that over to SARS. Okay, so this is our summary. But what's important that I think we need to know is this part. So we're going to take what we know here and we're going to convert it into our question, and then we will be able to do our question, right? So I'm just going to do this here on this page before I put it on our answer sheet. I'm going to draw the T account. Why? Because we already know they want us to calculate what is payable. So we're going to say VAT control, and then we'll just put this on the memo once we are done. Credit increase, right? So we know these are our payments, these are our receipts, and now we're going to take our question. Now remember, our VAT control account is everything that's 15% that needs to be paid to SARS, or everything that's 15% that we can claim from SARS. Okay, so let's start with our question. A says the amount due to SARS on the 1st of July. So that is a opening balance. An opening balance meaning it will be the credit side, right? So here you can basically write, I'm just going to write opening balance. The amount is 3870. That was your closing balance of the last calculation you did. So let's put here A. B says VAT on sales, right? VAT on sales. Now, because it says VAT, it means it's already the 15%. Now, on sales, we know that sales we need to pay the money to SARS, so sales will be on this side. So here, we just write here, sales, and we write the amount, 51750, and this is our B. C says purchases. We know that when you buy, you can claim. So it says purchases of stock exclusive. So this exclusive means it represents 100% of VAT. But we want the 15%. Now, for us to calculate it, there is a formula. You always take what you want over what you have, multiply by the amount you were given. Now in this case, let's say purchases. What were you given? You were given an exclusive amount. So this 245,000 represents 100%, right? You want 15%. So now we're just going to apply our formula. What is our formula? What I want 15%. What do I have? I have 100%, and then I multiply it by the amount I am given, 245,000, and my answer that I get is equal to 36,750. So my amount for purchases will be 36,750. This 36,750 represents the VAT, the 15%. Okay, so this is C. So we are done with A, we're done with B, we're done with C. Now we're going to do D. D says VAT, meaning 15% on goods taken by the owner for personal use. Now that's called drawings, right? Doesn't matter who takes it. SARS needs its share. So then we're going to say drawings or taken by owner. And then we're going to say now, remember VAT is 15%, it's 510 Rand. And this is D. Okay, so we are done with D. E says VAT, right? Now VAT means 15%. So it says VAT on total discount received from supplier. And now let's just break that down. When you receive a discount from a supplier, what is a supplier? A supplier is someone that you bought from. So if you took something and you were supposed to pay 15% on 100 Rand, right? You were supposed to pay 15 Rand. Now you get the discount from the supplier. You still need to pay the VAT. So the VAT on this discount still needs to go to SARS. Even if you got the discount, SARS still needs to get their share. Discount received, and the amount is 1740, and this is E. Okay, then we're busy with F, VAT, right? VAT 15% on debtors' accounts written off. Now, let's go to the beginning. When you sold to someone on credit, right, that person became a debtor. And let's say you sold to him goods of 100 Rand. He was supposed to pay you VAT of 15%, which is 15 Rand. But now you had to write off the debt. Okay? So then, meaning that you have to, because you must pay the amount that you sold to SARS. Now, because you wrote off the debt, SARS is no longer entitled to the 15 Rand, but only to the amount that was paid. Now, because you wrote off the debt, it means that you basically never sold it to SARS. But you already paid it when the guy took the money, or when you sold it to him, when the debt was incurred. So now you need to reverse that amount that you paid to SARS. Now, when you paid SARS, you credited the account. Now you need to reverse it. So that means you now need to debit it. And that is F, let me write it here, debt written off. And the amount is 930 Rand. Then we have G says equipment purchased. It's including VAT. So this amount is already, it says equipment purchased including VAT. This means it represents the 115% because this is your money and SARS's money. So what did they give you? They gave you an inclusive amount. What is it that you're looking for? You're looking for the VAT amount. What is our formula? What I want over what I have. But before we do our formula, we need to determine, is it on the debit side or on the credit side? Now, when you buy something, remember our summary said, when you buy, you can claim. So it will be on the debit side. And now we must just do our calculation. So let's say this is G, and it is purchase of equipment, or let me just write equipment there. Now I need to do my calculation. What's my calculation? What I want over what I have. What do you have? You have the inclusive amount. So what is it that I want? I want 15%. What is it that I have? I have 115%, and the amount that they give me represents what I have. So this is 11 to 70, and then you say 15 divided by 115 times 11 to 70 will give you an amount of 1470. You can always do it another way around, right? You can test this. You take what you want over what you have. Let's say you're going to use excluding. This is just an additional way to show you. If you say 100 over 115 times 11 to 70, you will get an answer of 9,800, but this is actually a long way. So then you now need to, because remember you're looking for VAT. And how do you get VAT? It's exclusive plus VAT equals to inclusive. So if I want VAT, I will then have to say my inclusive minus my exclusive will give me my VAT. So what's my inclusive? My inclusive is the 11270 What's my exclusive is the 9,800, which will give me VAT of 1,470. But this year is only a longer way to do it, but you can always test it if you want to. Okay, so that was G. And then we have H, and H says VAT, meaning 15% on old equipment sold on credit. Remember, when we sell, we always sell on this side, because everything you sell, 15% of that needs to go to SARS. So we say a sale, old equipment, and they gave us the VAT amount because they said it's VAT. So this represents 15% is 720. Okay, now we need to calculate what needs to be paid to SARS. Like we normally do our balancing, add a 2, this is H, oh sorry. So we're going to add it up and then we're going to compare. So we're going to add it up and then we take the highest amount. So if we add this up, this gives us 8,570. We write it here as well, 8,570. And then we add up this amount. This amount gives me 39,150. And then I take the, so remember my balancing, this needs to get to the same amount as this. But this is 5,570. This amount is only 39. So remember, I told you from the beginning, if I have a balance on this side and it goes here, this side is always payable and this side is always receivable. So then I say 58,570 minus the 39,150 gives me 19,440. So this 19,440 needs to go to that side, and therefore this is my payable amount. Thank you so much. Okay, before let's now just write it on our answer sheet, on our memo, which was, so we take our memo, there they have our opening balance, so it's the opening balance, which is the 3,870. Can you see we have it here? Then we're going to go to our, namely, just fold this. So then we're going to have our next one, which is sales. We're just going to write the amount, 5,1750. Then we're going to write our 510. Then we're going to write our 1,740. And then we're going to write our 720. On our input side, we have our purchases, which is 3,6750. We have our 930. We have our 1,470. Okay, so now we're going to add up all the amounts. Remember, this is 5,570, 5,570. If we add up this here, it will give us 39,150, right? So for 39,150, for us to balance and get to 5,570, there's an outstanding amount of 19,440, of which this 19,440, our next month or our next period, this will be our opening balance, and this is the amount that needs to go out to SARS, and therefore it is our payable amount. Thank you so much.